All right. Hello again, everybody. This is Mike Rixey. I'm the lead options instructor for NetPicks, and this is our weekly options recap. We have a very active market again here today. It's been a very active week with pretty big moves in both directions, and I want to talk you through some of the trades that we've closed out here this week. Also, preview what we're expecting going into next week. I think it's going to be another active week next week as well. So let's go ahead and talk technicals here first, big picture. I like to start out with the daily chart of SPY. It just gives us a good glimpse into overall market environment. Are we bullish, bearish? Are we more neutral? What has volume been doing? It helps paint a picture for me. That helps me determine how aggressive I want to be on my positions. I'm not using this chart for entry and exit points. I'm strictly using it for just big picture outlook. Well, when you take a look, no surprise where the low came in today. For those of you that have been joining us the last few weeks, we have been talking about key support levels down below us. And one of those areas has been the 50-period moving average, both the simple and the exponential. They have been sitting right on top of each other now for the last few weeks. We are sitting right around 379.50. Where's the low of the session on SPY today? We're at 378.23. We barely broke that level and then have since bounced off of that level, off of the lows. No surprise that the bulls are defending that level. That level has held now for months. In order for us to get anything going on the downside, we need to see a close below that level. And we're not seeing that as of yet. Now, there's still an hour and a half to go in the session. Anything is possible in this market. But currently, it has that look and feel of that Friday afternoon rally. We held a key support level. Markets are well off of the lows. Volume's very, very good. I expect at least another attempt at a push to the upside. We'll see what happens here. I've got a lot of time left in the session. But if we do rally up, where are areas of resistance above us? We have the 8-period EMA, that solid pink line. And then we have the 20-period moving averages, both the simple and the exponential, sitting right around 386.70. That'd be the first area of resistance. Above that, we've got pretty clear sailing up to the all-time high at 394.17. The volume, very, very good. Again, still an hour and a half to go in the session today. We've already had 100 million shares trade today, well above what we have seen over the last number of months. I mean, this week, the volume has been very, very good. We've had a couple of sessions. This is going to be 3 sessions so far this week that we have crossed 100 million shares trade on SPY. Very, very good volume, which is good to see. So I want to see that 50-period simple and exponential moving average, that little cluster right there. I want to see that broken if we're going to get anything going on the downside with follow through. Below that level, if we do break, there is a very large air pocket down to around 370. So it's no surprise that the bulls are stepping in here trying to defend, because if this level breaks here, if this 50 EMA breaks, it can get ugly in a hurry. And we've also been talking about how we are looking for the ATR, or the average true range, to expand. Going back into last week, we were talking about how that ATR was approaching the 4 level. No surprise, with the market so active this week, we have seen that level turn upwards, up above 5. Good to see. Those of you that are day traders, you love it. We've had incredible range here today. A lot of big moves in both directions. So very good to see that range expand. We want to see that ATR stay close to 5 or above. That would be a welcome sight. The VIX did get up above 30. That's been the cap on the upside. When we've had these brief sell-offs, we haven't been able to break above 30 for any length of time. The VIX is well off the highs, already approaching the 27 handle. No surprise, with equities rallying off of the lows, they are crushing the VIX, or they're trying to at least. The VIX is down about $1.50 here so far today. So very mixed price action. You've got the Dow weak, the NASDAQ is super strong. You've got the Russell strong as well, and the S&P basically unchanged. So very mixed market as we go into this afternoon. Heading into next week, I'll circle back to this in just a moment. Guys, it's been hard to get anything going on the downside for any length of time. Every dip has been bought, and until that trend breaks, it's hard to expect anything other than a rally going into next week, another buy the dip scenario. We also have the unknowns. Are they going to vote on the stimulus plan? Is the House going to vote? Sounds like they are, but we'll just wait and see. If there is another $2 trillion released here as a stimulus plan, we know how much the markets love that type of headline. So that could very well play into another rally going into next week. Before I get into some of the trades that we're looking at going into next week, let's talk about some of our overnight pop trades that we closed out here this morning. We've talked about these trades at length here in the last couple of weeks. We like to start out our sessions talking through these overnight trades, and they continue to perform really, really well for us. Those of you that had joined us for our live webinar yesterday afternoon, you heard us talking about selling a put spread on Apple. And we did this right before the close yesterday, right around 3:30 Eastern time, very typical time for us to open up the overnight trades. The goal of those trades is to close them out the following morning. What we did yesterday afternoon is we sold the 121 to 119 put spread, meaning I'm selling the 121 put, I'm buying the 119 put at the same time. That gives us a fully risk-defined trade. We want price to stay above 121. As long as price stayed above 121, we are going to make money on the position. Now, we collected, let me get my spreadsheet up here so I can get the exact prices. Just been busy today, so I can't remember the exact price on the trade. We got filled at 64 cents yesterday afternoon. So we collected $64 per spread. It had us risking $136 per spread. That's the most I could have lost on the trade had we seen this move to the downside. Had we seen the trade go against us, we would have been out $136. So a very reasonable trade as far as the risk goes. Very reasonable for a wide range of account sizes. We closed out of the spread for 16 cents. And the beauty here is we closed this trade out within the first few minutes of the session this morning. The market opened up, opening bell rang. We were able to close this out pretty quickly. We had a brief move higher at the open. We then saw a mid-morning sell-off. Markets have since rallied back up, but we didn't have to hold very long. We were able to close this trade out, bought it for 16 cents. It gave us a $48 profit per spread. Doesn't seem like a huge profit at initial glance, but that's a 35% return on our capital overnight. That's huge. I mean, that's a great trade. Using our risk parameters, we like to track these trades risking $500 per trade. It gave us $144 of profit. The beauty here is when I put this trade on yesterday, it was right around 3:30 Eastern when we queued the trade up and we placed it. We were filled almost immediately. Within a couple of minutes, we had the trade on. First thing this morning, we placed our closing trade. We were filled pretty quickly. All in all, I mean, we had less than 10 minutes into this trade. Doesn't guarantee we're going to win on every trade. No system's going to be perfect. But the beauty here is we had a risk-defined trade. If we were dead wrong, I knew what the risk was. I knew what our maximum loss was right up front. And we had 5 ways of making money on the position. We made money if Apple moved up, down, or sideways. Didn't matter to us as long as price stayed above 121. We made money from the time decay adding up. Time decay was significant because it's expiration day. These options expire at the end of the day. We also made money if volatility decreased. So first thing this morning, market opened up, closed it out, booked the profit, and we move on to the next trade. That's 10 winners in a row on the overnight pot trade. We continue to see that winning percentage hover around the 75% level. So really good performance for us. And it's a nice way to stay active throughout the week. It's a nice way to generate that consistent source of income a couple times a week. For me, it's beneficial because I've got some longer term positions that I'm holding for a matter of weeks. This allows me to book the profit in the near term while I'm waiting for some of those longer term trades to complete. Now, the other trade that we put on, and actually before I leave the Apple position, let me show you the current price. It's currently trading for 4 cents mid price. Clearly, I mean, hindsight's always 20/20. We've always got to fight hindsight as traders, right? It's always easy to look back and say, I should have done that and I should have done this. I mean, but for us, in real time this morning, closing this trade out for 16 cents, I'm going to do that every time. It gave us 75% of our max profit. It allowed us to close out of the trade, avoid any type of big sell-off. This market's been all over the map this week, and it just freed up the capital for the next round of setups. Didn't require me to sit there and watch every tick throughout the day. I was able to book the profit and just move on to other things. So that's going to be our approach. We want to close those trades out as quickly as possible. This is clearly an example where had we held throughout the day, we would have been able to make a little bit more money, an extra 12 cents per spread. But to book the profit and avoid the stress level throughout the rest of the day, that was a huge benefit from closing this morning. Now, the other one that we put this one on with our ETF Options Superstars program. It was indeed an overnight pop trade. And we were using SPY for this setup. We came in yesterday afternoon, a very similar time frame. We opened it up right around 3:30 Eastern time. And we sold the 380, 378 put spread, meaning I'm selling the 380 put, buying the 378 put, looking for price to stay above 380 on SPY. We know price has stayed up above that level. It's been all over the map today, but it's still above 380. And it was earlier this morning, right after the open. We sold the spread yesterday afternoon for 62 cents. We collected $62 per spread. It tied up $138 of our capital per spread. That's the most I can lose on the trade. And we were able to close it out this morning. I closed it out for 26 cents. It gave us a $36 profit per spread. That's a 26% return on our capital overnight. In and out less than 24 hours. It was not a day trade. We did hold overnight. I had some questions come in on that here this week. Is this a day trade? It's not. We open it up the afternoon before expiration. We close it out on the morning of expiration day. So we don't have to worry about the pattern day trading rule kicking in. So $108 profit if you're risking $500 per trade. Just like Apple, had you held all day, yeah, we could have made a little bit more money potentially. But in this market, still an hour to go in the session, we could very well see a big sell-off in the last hour. So we were definitely looking to close it out as quickly as possible, and we were able to do so first thing this morning. So another winning trade there on SPY. Will I be looking for another overnight pop trade this afternoon going into Monday's expiration? For those of you that are newer to trading options, in most cases, options are going to expire on Friday. SPY has Monday, Wednesday, and Friday expiration. So we have the potential for 3 overnight pop trades each week. Friday afternoons into Monday expiration is a little bit tricky. I don't always place overnight pop trades going into the weekend. They can be challenging because obviously anything can happen over the weekend. A headline hit, right? I mean, if it's a terrorist attack, if it's a headline with more stimulus, whatever it might be, there's just so much that can happen over the weekend. And if we do get a big headline hit with markets closed, there's not a single thing that we can do. It becomes a little bit more difficult to predict what's going to happen Monday morning. I will place overnight pop trades from time to time on Friday afternoons, but I do evaluate things during the last hour of the session. So I can't say whether we're going to take one today or not. We'll just have to wait and see what happens here over the next half hour to 45 minutes. All right, a couple of trades that are on my radar for next week. Let's go over to the 195-minute chart. This is the chart that we actually base our entry and exit decisions off of. And looking at SPY, I don't know why I think TradeStation's not responding here. Unfortunately, I'm trying to move that note out of the way. So we just talked about our overnight pop trades. I'm trying to get it out of the way. There we go. So it's easier to see. So we are in bearish mode here. Big picture going into next week. We have seen bullish momentum take over this week. How do I quantify that? Well, a couple of things. Number one, we have seen our trend strength histogram go from blue to red down at the bottom. We have also seen price action close below our moving averages up top. That red and blue line is our 8-period exponential moving average. The white and yellow line is the 50-period exponential moving average. Both of those have been broken on the downside. So we are in bearish mode. When I talk about being in bearish mode, I'm talking about trades that I'm expecting to be in for a couple of days and out to a few weeks. Am I using this to guide my overnight pop trades? Not necessarily. If I take a bullish trade going into Monday's expiration, that's perfectly acceptable, right? So when I'm talking about in bearish mode, if I've got a bearish trade on based off of the 195-minute chart, my typical holding time is anywhere from 3 to 30 days. That's what we're expecting here. So we did get this short trade to trigger in here yesterday. This blue plus sign is our short entry point. If you put on a new position, we're talking about long puts or a long put spread. Anytime that I am buying an option, we are targeting 100% returns on the option, limiting our risk to 50% of the cost of the option. So far, so good on this trade. Now we need some follow through. And I know that's the tricky part because anytime that we've had selling pressure over the past few months, every single dip has been bought up pretty quickly. So we need to see that follow through going into early next week, and we'll see if that plays out on SPY. The NASDAQ ETF, we've talked about how the NASDAQ has been the strong name out of the index products so far today. It was overdone. The NASDAQ had been the weak name out of the bunch over the past week and a half or so. Did get oversold in the near term. You can see this move to the downside that we have had. Nice move on the downside there. A lot of profit potential had you put on a bearish position when that trade triggered in. But now we're left with an oversold condition. Now we have those yellow bars on our pulse indicator. What that leads us to looking for going into next week is the potential for some of these tech stocks to bounce. When I see those yellow bars on the pulse, it indicates that price is between a 1 and a 2 standard deviation move on the downside. When I see those extremes on the pulse, it'll typically lead to a period of consolidation or a reversal in the other direction, in this case to the upside. Now, one of the filters that we've talked about with our customers, if you wanted to sell a put spread going into next week, I wouldn't have any argument there. I wouldn't have no pushback. A filter that you could use if you wanted to wait for confirmation is to wait for price to close above the 8-period EMA, that red and blue line. I wouldn't have any issue there if you wanted to wait for price action to confirm, see if we do get that bounce going into early next week. So if you want to sell a put spread now here this afternoon, wouldn't have a problem with it. If you want to wait till early next week to see if we do get a close above the 8 EMA, that's perfectly acceptable as well. So cautiously bearish here in the near term. I say that because, the bearish momentum has been in play for most of this week. So it's hard to argue that fact. I mean, this chart is pretty ugly, but we are oversold in the near term, so that we can change that opinion in a hurry going into next week should we start to get a bounce. Now, speaking of the tech names, let's talk about Apple. Apple is a big component in the index products, big component in QQQ, big component in SPY. And if we take a look, Apple's had a nice tradable move to the downside. We went into bearish mode here back on February 11th. You can see our blue plus signs here. That was our entry point. Price action had broken through our moving averages. We broke the 8 EMA, broke the 50 EMA, and we went in to a bearish position. That move to the downside has played out really nicely. Now we are oversold. We have all of those yellow bars on the pulse. If we go back to previous instances where the pulse has gotten to an extreme, printed yellow bars, look what's happened. If we go back into December, had yellow bars on the upside, price action stalled out and reversed to the downside. We got another case late January, had yellow bars on the upside, price action stalled out and reversed lower. Now we've got the yellow bars on the downside. So now we're looking for either a period of consolidation here or even a reversal to the upside. Notice how price is testing the 8 EMA. We're going to see if we can break above that level. If we get a break above that level, certainly has me looking for potentially a bullish trade going into next week. Apple has not stayed down for very long. We know that Apple is very, very resilient. So one of the things that we could do, one of the things that we could look at for next week, let's go ahead and pull up Apple. We can go ahead and take a look at potentially selling an out of the money put spread. I'm going to continue to be conservative here. We've had big range in this market. Markets have been all over the map. Could you come in and just buy a long call or long put? You could. I just want to be more conservative given the overall nature of this market. I want to define my risk on the trade. I also want to give myself 5 ways of making money on the trade. So the way that I'm going to do that is going to go out to the April monthly options, the ones with 49 days left to expiration. I'm going to go to the out of the money put options on the right-hand side. And I'm going to go out to, let's go ahead and take a look at the 117.5 puts. Okay, they're about $6 out of the money. I'm going to right click on those puts, go to sell, and I'm going to select a vertical. And it's going to pop up an order down at the bottom where I am selling the 117.5 put. And I'm going to take a look at buying the 115 put. I'm buying the 115 put at the same time to give myself a risk-defined trade. Just in case I'm wrong and the market does fall apart going into next week, we get a continuation to the downside. I want to know what my maximum loss is on this trade. So let's click on confirm and send, and let's take a look at the numbers here. If I collect $77 per spread would be my maximum profit potential. I make money on this trade as long as price stays above 116.73. I don't care if Apple moves up, down, or sideways from here. Doesn't matter. As long as it stays above 116.73, I make money. Now, we make money the fastest if Apple continues to move higher. If we get a bounce higher next week, it's going to allow us to see that P&L pick up in our favor faster. If we just chop sideways here, we can still make money from that. We're just going to have to hold longer. We're going to have to wait for the time decay to add up in our favor. So up, down, or sideways, we're okay in all 3 directional moves as long as price stays above 116.73. We also make money from time decay adding up, and we make money from volatility decreasing. So those are the 5 ways that we have of making money on the trade. So only tying up $173 of capital. That's the most we can lose in the trade. I love that. I love that risk management, because if you take a look, if we come in and take a look at buying a call option on Apple, if we go out and let's just take a look at an in the money call option out in April. Let's say we looked at the 120 call. You're talking about $850 per contract just to put on a single contract for a bullish trade. With our spread here, by selling the put spread, we reduced that cost all the way down to $173 per spread. It's still a bullish trade. I still want the stock to move higher. We just give ourselves multiple ways of making money. Why wouldn't we do this all the time? What gives? Seems like an ideal scenario. They're great trades, but we have a limited profit potential as well. If we get a big move higher over the next week or two on Apple, the long calls would give you more profit potential. They're just going to require more risk as well. It's higher risk, higher reward scenario. With the credit spread, we have a lower profit potential with a much lower risk. I like that trade-off in today's market. I prefer to be more cautious given the uncertainty in this market right now. SPY, SPY up or down for power hour. It's hard to tell. I mean, if we go back over, let's see if I can load up my 5-minute chart here a second. This 5-minute chart of SPY is what I typically gauge for intraday movement. And if we take a look, I mean, the market has tried to sell off a couple of times. Well, we know a couple of things. First of all, going into Friday afternoon, we've seen a lot of massive rallies higher going into the close on Friday. We have held some key support levels today. We talked about the 50-period EMA earlier on the daily chart. We've tried to sell off a couple of times. We continue to make higher lows here intraday. I wouldn't be surprised if we move higher into the close. It's kind of what I'm expecting at this point. So do I have trades on going into the close? I don't. I've done a lot of my trading here earlier in the session. So the last thing I'm going to potentially be looking for is a potential overnight pot trade during the last half hour of the session, looking for a trade to close out on Monday. And I'd be doing that on SPY. I just want to wait and see what happens over the next half hour or so first. Why do I use the old version of TradeStation instead of the new one? So I am going to continue to use TradeStation 9.5 until they absolutely force me to move to TradeStation 10. To be perfectly honest, I hate TradeStation 10. I think it's trying to think of a nice way to put this. And part of it might just be on my side. I've used TradeStation 9.5 for so long. I'm so used to it. I'm so ingrained to, where to find things. TradeStation 10, I just find it's a clumsy layout. I don't like to use it. So doesn't mean it's bad for everybody. I much prefer 9.5 myself. Not even close, actually. And the same goes for those of you that use NinjaTrader. I still use the older version of NinjaTrader as well. A lot of times when they release these new software updates, new versions of platforms, they add a lot of bells and whistles that I don't use, I don't need, and it just slows the platform down, in my opinion. So yeah, I much prefer the older version at this point. All right. So Apple's on the watch list for next week. Want to take a look at some additional tech stocks early next week, see if we get this bounce. Had a lot of talk already of, hey, the low is in on the pullback. Now we're going to see another wave. Let's see tech take the baton here, take the leadership into next week, and we'll see if that happens early next week. There's definitely some signs of a near-term bottom in place on the NASDAQ. So we'll jump back in on Wednesday next week. I'll jump back in on Wednesday for our midweek update, and we'll take a look at where things are at that point. If you have any questions in the meantime, feel free to email me directly. More than willing to connect and answer any questions you might have. Let me just take a quick peek, make sure I got to all the questions. So yeah, enjoy your weekend, everybody. I'll be back here on Wednesday next week. If you're watching the recording, feel free to post any questions, comments on the Facebook video or in YouTube, and I'll get back with you right away. So enjoy the rest of your afternoon. Enjoy your weekend, everybody, and I will talk to you all here next week.